Good morning, everyone. Happy Wednesday. My name is Justin Nimergood. I'm your host of the Real Estate Rockstars podcast. I'm so thrilled to have the guest we have with us today, Mr. Dave Foster. Today's guest is an expert in helping real estate investors keep more of their equity working for them through smart, compliant tax strategies. Dave Foster is a seasoned real estate investor, 1031 exchange expert, and qualified intermediary with more than 2 decades of experience guiding investors through complex transactions and tax deferral strategies. Dave serves as executive director of the 1031 Investor, where he provides education, consulting, and qualified intermediary services to investors around the world. Working closely with realtors, title companies, and individual investors, he has helped thousands defer capital gains taxes through IRS Section 1031 exchanges, Section 121 exemptions, and portfolio positioning strategies without missing deadlines or violating IRS rules. That's quite important. Through discipline, planning, and execution, Dave has used these strategies in his own investing journey, building long-term cash flow and achieving financial freedom while continuing to grow and protect wealth. His approach focuses on clarity, compliance, and helping investors understand how tax strategy can accelerate portfolio growth. Whether working with first-time exchangers or experienced investors, Dave is known for making complex tax rules approachable and actionable so investors can maximize returns while minimizing tax exposure. Without further ado, Dave, welcome to our show.
Wow. Anytime you use tax, strategy, and that kind of thing in the same sentence with the person's name, I automatically feel boring.
Oh, no.
You know what? In all of
Tax is
that,
not boring.
I'm just the guy that found a way to do it a bunch of years ago. And I've been doing it for myself and for others ever since. And the results have been quite remarkable.
Well, let's get right into it. As we were talking before the show, you definitely have the experience, many years of experience in the 1031 exchange, which admittedly, as we talked about, it's something we haven't really dived into too much on this show so far. And it's definitely something that everyone should know about. So let's dive right in. Dave, feel free to serve us up a masterclass here. What do we need to know about the 1031 exchange? How can we use it? How can people be more aware of it? What do they need to know out there?
The first and foremost thing is everybody thinks there's this magical, mystical hoodoo voodoo thing called a 1031 exchange that's probably like a lot of other loopholes. And yet it's really not. It's something that's been a part of the tax code since 1920. But the IRS isn't going to advertise it because they have to lose a lawsuit to make it available. And they're obviously not going to teach us about it. So that's where I come in. And in essence, why it's so powerful is it allows you to sell investment real estate and then using the process, purchase new investment real estate and indefinitely defer paying the tax that you normally would on the profit and on depreciation recapture, which is an even bigger story in our new markets with the one big beautiful bill and all of that, all the opportunities that are found within that. That's the essence of the 1031. Here's the real life example for me. The greatest move I ever made was second greatest move besides getting married. 30 years ago, somebody on date night said, you know what, let's go buy a sailboat and sail around the world and raise our family. It'll be easy, right? And then that was followed by the worst mistake I ever made because my nickname is Ready, Fire, Aim Dave. And I thought, hey, becoming a real estate investor is easy. Let's do it. I bought a piece of property in Denver, Colorado. We rehabbed it. We put renters in it. I later sold it. Life was beautiful, right? We're on the way to our 10-year goal of being able to sail away and raise our family. And my accountant called me in and said, get the checkbook out. You're writing a check for $30,000 this year. No, that was not part of the plan. That was going to put the sail away goal in jeopardy, or at least slow it down a lot, because I did not do a 1031 exchange. So the real world application, if I would have done a 1031 exchange on that first sale, I would have had the access to that $30,000 for the last 30 years. And anybody who's ever done any kind of compounding studies will tell you that if you can make 10% on your money, that 30,000 is going to double every 7 years. How
Yeah.
much money would I have right now from that one transaction that, yeah, still wakes me up at night because it ticks
Wow.
me off? But when I had to do that, I learned the lesson, found the 1031 exchange. We started doing it for ourselves, saw the power, started doing it for others. And the end of the story is within 10 years, we managed to move our entire real estate portfolio from Colorado to Connecticut to Florida. We bought a 53-foot sailboat with tax-free dollars, moved aboard and raised our family for 10 years, living off of the income from our portfolio of vacation rentals. And since that time, I've never paid a penny in capital gains tax. That's what the
Wow.
1031 can do for you.
Wow. There you have it, folks. I mean, if you're not paying attention and taking diligent notes here, and you are an investor of any kind, or you're looking to become one, this is gold. This is absolute gold. So what is I mean, you kind of outlined it for yourself, what one of the faux pas or one of the major mistakes that people make is, which is not leveraging it at all. What is another common mistake that you see people making, maybe in how they leverage it, and not leveraging it properly or to the full benefit, for example?
Sure. So the greatest fear that I encounter with people who are looking is, number one, it's complex. Um, it's really not. I tell people the hardest 1031 exchange you'll ever do is your first one, because it's just simply a process that requires a guide. You can't DIY these. You have to use someone like me, a qualified intermediary, and we're your guide through the process. So thinking they're too complex is one big mistake. Secondly, is worried, the fear I'm not going to be able to follow the timelines because they're a little rigid. You've only got 45 days after the sale of your old property to line up your new replacement. So people get very scared. And you hear it all the time. I'll be forced to buy a property I don't want. Well, no, you're not. There's no penalty for starting a 1031 exchange and not completing it. And it's not the property that you don't get that's ever going to cause you to go broke. It's going to be the property you got that you shouldn't have. So
Mm,
again, I tell people, if you cannot find the right property, stop the train. Don't complete the 1031. Now, you're going to pay some tax, but nobody's ever gone broke in history paying tax on profit. It just feels like it. So the idea of starting at 1031 to keep your options open, because the whole power of it lies in time. Every day that I keep the tax deferred, I'm making the money on it. It stays in my
mhm.
pocket. So if you can do that for 25 years, awesome. If you can only do it for 3 or 4, and then you sell and you can't find the replacement property, so be it. But you're at least giving yourself the option to do it. So it's like overcomplicating things is where people get at with this. And then thirdly, trying to use it as a popcorn fix.
Ah,
The 1031 exchange truly is a crock pot. It's a slow cooker that's going to have its best impact over time. And so that takes planning. If you're the kind of person that is, and I got a little bit of it in me, the adrenaline junkie, you got to fix, you got to flip, or this week it's stocks, next week it's real estate, next week it'll be debt instruments. The 1031 works best when you dedicate to that. Flipping in and out from real estate to equities because you think that's where the market's at isn't going to help you. But the 1031 exchange used appropriately, though, can allow you to move wherever you want in the United States into whatever type of property you want. So you can really use it to adjust to what the market is telling you. But to get its greatest power, you gotta keep it in real estate
Mm-hmm.
and then use it whatever the market is telling you to do.
Wow. Yeah, I mean, listen, I know that uh, for many investors and casual investors out there, this might be an afterthought, but it really should be a forethought. And I love that you made the point that this should be part of the I love the slow cooker metaphor, right? It's got to be part of your innate strategy through and through. You mentioned earlier a little bit about tax deferral, the tax deferral component of it. Um, I'm sorry, depreciation. Excuse me,
Oh, yes.
tax deferral. Yeah, the tax, depreciation, deferred appreciation as a depreciation as they call it. Could you talk a little bit about that component of it as well? Because I
Yeah,
know for me, I follow a lot of the real estate junkies out there, and this is something that all of them talk about as well.
oh yeah, man. That's actually a great example of what you said right before that was the idea of how to use the 1031 strategically with planning. So, in essence, for anybody that doesn't understand depreciation, which is actually most of us, um, depreciation is a pretend gift. Okay, what are the most famous false words that should scare you to death? I'm from the government. I'm here to help. So they're giving you depreciation. They're letting you pretend that your property is losing value every year. Now, is that really true? No. Real estate throughout history always goes up, with fluctuations, of course. But they let you pretend because they give that to you as a tax write off every year. Now, that sounds kind of awesome, right? So, that's the first thing that people will do. They buy a piece of investment property and then they'll either start taking depreciation on it, or in today's environment, vacation rentals for high net worth individuals are huge because they can write off the entire value of the real estate. And because it's a vacation rental, it's considered active participation. So that medical doctor, the high net worth software engineer can take advantage of 100% of the value of that real estate as a tax write off in the year they did it. Sounds kind of cool, doesn't it? When
Absolutely.
you sell that property, the IRS makes you pay it back
That's not
as
fun.
if that's right. I mean, that's not cool. So the answer, though, is the 1031 exchange because the 1031 exchange allows you to defer not only the profit, but any depreciation recapture. So, someone who is concerned with not only the front door of making money, but the back door of saving money. And by the way, that was the turning point for me. Was when a mentor told me way back when. He said, "Dave, the true measure of wealth is not how much money you make; it's how much money you keep at the end." So you got to watch
Mm,
both the front and the back door. But the way people will plan to use that is they want to defer the profit, yes. They don't want to have to pay back the depreciation, but they want to get the value of it. So let's say they buy the vacation rental in the Smokies. They take all the depreciation write off. Now it's time to sell it. Go buy two. Use the 1031
mhm.
exchange to buy two properties and get additional depreciable basis on the second one while keeping the depreciation from the first one deferred. Any idea how long they can do this?
For forever, right? Can't you keep doing it forever, basically? If
You can actually do it from the grave, and it's even better. Well, if being dead can be even better. The motto in our industry is defer, defer, defer. Because when you start deferring, you're starting the compounding effect of making the money off the deferred taxes. Defer again because you can react to wherever the real estate market is taking you into any type of property, anywhere, any number. The third defer is defer because just like you can react to the real estate market, you can react to wherever you are in your cycle. Time to speed up, got a lot of energy, start buying those multiple properties. Starting to get tired, then time to consolidate and ease your burden. Growing family, start to buy vacation rentals. You can build memories and make money. High net worth, buy those vacation rentals to take advantage of depreciation. The fourth D is to die. Defer, 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 and die. Because when you die, your real estate will go to your heirs at what is called a step up in basis, which means they inherit it as if they paid market value on the day you died. You never pay the tax. Your estate never pays the tax. Your heirs never pay the tax. You just
That's
handed
a good
down a
deal.
tax-free legacy to your heirs. Most awesome thing in the world.
That's as good as it gets, right? Isn't that the American dream? Is to pass down a true legacy, and one that's not been eaten into by taxes and by the government, so to
Yeah, I'd
speak.
call that the second best American dream. I think that the real American dream is to slide into the casket doing a 180 on your Harley, penniless with an empty checkbook and saying, "What a ride." But dying would be the second best way, I suppose.
There you have it, folks. If you weren't sure the best way to die, Mr. Dave Foster just mapped it out for you.
Call me Dr. Death.
We're gonna switch gears for a moment to kind of the final segment of our show, where I'm gonna ask you a couple zingers, and we're gonna have some fun with it. All right, Dave. So the first question is this: imagine it's your last day on Earth. Funny enough, a nice segue from where we were. And you can only preserve 3 items in your time capsule. What are those items and why?
3 items in my time capsule would be a picture of my wife, because she's been the most amazing gift God's ever given me. And
Oh,
my biggest mistake, real estate was my second. That was the second. My biggest mistake was not marrying her sooner. I would
oh,
put a copy of the Bible in it, because that's been my guide, my roadmap, and not just in the spiritual realm that you think, but in practicing business and living life and relationships. And then thirdly, I put a picture of my sailboat, because Robin Williams said it great in, I can't remember the name of the movie now, but Carpe Diem, right? Seize the day. Your regrets in life are not going to be the things that you did. They're going to be the things you didn't do. We took advantage and seized the day. And that sailboat is the proof. And we do it again in a heartbeat.
what is the name of your sailboat?
We called it Odyssey, ODYSEA. And actually, one of my children named it. He was 6 years old. And there was a TV show that I called Adventures in Odyssey. And he's kind of a punster. He said, "Dad, we could have adventures on Odyssey." And that was it. It's
Yeah.
it.
And it's not after the Odyssey or the Iliad and one of those books that we read when we were in school. It's like
Or
actually.
pretended to read. Come on, Justin.
Oh, thank goodness for that. Okay, final question for you, Dave. What is your definition of what a real estate rock star is?
Well, that's the most awesome question, because FOMO, the fear of missing out, or the fear of comparison, I think robs so many people of the joy of being a real estate investor. So it's not in the amount, it's not in the size, it's in what real estate does to allow you to live your life. I've met very few people who would tell me that at their core, all they ever wanted to be was a real estate investor, and what they are is a real estate investor, and that's their only passion. But I meet a lot of people who have used real estate to help people out, to prepare themselves for their retirement, to pay the bills for their children. And so I guess I would say that the true measure is how your real estate investing is taking you to the other goals in your life. And that, it's not about Not everybody's trying to get the Bugatti that you see in every TikTok clip, right? It's all about, is it taking you to your goals? And maybe your goals are nothing more than trying to get that cabin in Taos so you can build some memories for your family. Maybe it's a small portfolio of rentals to help you in your retirement. Or maybe it's trying to earn up to that retirement home. Those are the goals that real estate investors have that aren't truly real estate. They're lifestyle goals that real estate can help you achieve. And that's where the 1031 comes in, because it's the tool that adds gasoline to that fire and propels you towards those goals. Did that answer
Absolutely.
anything?
Ooh, that was fire, Dave. That was fire, as we like to say. Well said, sir. There you have it, folks. An absolute masterclass from Mr. Dave Foster here today. Dave, where can our listeners, our subscribers, and just our community out there, where can they find and connect with you?
Yeah, slow cooker, right? So education is key. And that's how we've designed our entire presence. The1031investor.com takes you to our site with our YouTube educational videos, our calculators, opportunities to talk to us, get involved, start your 1031 exchange, the1031investor.com.
There you have it, the1031investor.com, folks. We have another wonderful guest, another wonderful week here on the Real Estate Rockstars podcast. I am your host, Justin Nimergood, signing off. Thanks, everyone.